Nilesh, your point in banking is interesting because many of these stocks like Yes Bank and IndusInd Bank have had meaningful corrections. But do you think these private banks can, in the context of how much PSU banks have corrected in terms of valuations, can we start to trade at, say, a 1.4, 1.5 times book?
I would probably say that the probability of them going below 2 times price to book, I think, is very, very high. You clearly seen, if you look at most of the public sector banks, they used to trade at a marginal premium to their book values, and now they've come down. Their valuations itself have halved from about 1.25 to 1.5 times price to book to about 0.5 times price to book. I think on a similar kind of a basis, if these private sector banks have been trading at 3 to 4 times price to book, I would be surprised if they start trading around 2 times price to book, if not 1.25 or 1.5 times price to book, because I think a few of them had some differentiated business models which look very vulnerable, which means that if a lot of them probably were dependent on the short end of the money markets to kind of borrow and really lend at the long end, and we're clearly facing an inverted yield curve, and that's going to pose serious challenges on their margins. And as I was alluding to earlier, that again the asset quality is going to definitely come under pressure. It may not be a complete washout like the way we've seen in public sector banks, but surely you're going to clearly see a lot of cracks out there in terms of their asset quality. So even a marginal deterioration in their asset quality, I think, will have a disproportionate impact on their valuations.
To us, Nilesh, what's bothering public sector companies across the board? We've seen some massive price destruction. Coal India, NTPC, ONGC, all the oil marketing companies. Why has the market taken such a dim of anything that's got the PSU tag?
Well, at the fundamental level, clearly most of these companies have not delivered in terms of their operating parameters, be it revenue growth or operating profit growth. I think as a basket, clearly we've seen a deceleration in terms of their fundamentals, and I think that's obviously been the biggest worry. But apart from that, I think this whole frequent revisiting capital markets to basically offload a stake in them clearly brings about a liquidity overhang in terms of the stock. So I think that's clearly the second factor. And third, of course, is that I think a lot of the global investors have been overweight on this pack. And as you see a lot of these global investors begin to make those underweight calls on India, it's pretty natural that if these stocks are part of any ETF or large index traded funds, you clearly see now a selling there happen. And I think lastly is that I think there is also an apprehension or a concern that if the balance sheets of the public sector banks will be kind of put to use to raise foreign currency bonds or foreign currency debt, and I think if that were to happen, I think in this environment to kind of further expand your leverage ratios may not be a great idea. So I probably believe that you're clearly seeing a combination of all these factors play out simultaneously, along with, of course, a depressed market environment, which is really leading to some kind of capitulation in these stocks.
What about telecom? We used to talk much less about this sector than in the last 1 month or so. Do you think that can put its hand up as a comeback candidate?
Yes, I probably believe that this is one of those serious comeback candidates, and of course a couple of years back there were several concerns in terms of either the balance sheets of some of these companies or of course the headwinds which the sector was facing. But it looks like that a lot of that has now receded in the background. Some of these companies, especially the frontline companies, have registered pretty smart improvement in their operating performance. And I probably believe that investors are relatively underweight. And it's one of those very few pockets which is registering growth. I mean, apart from, of course, technology or media on a very selective basis, probably telecom is the third pack which is delivering some kind of earnings growth in this kind of an environment. And I wouldn't be surprised if you actually continue to see outperformance on the telecom side. It's pretty much a scenario like the late 90s where you actually had the TMT, technology, media, telecom, as a pack which kind of delivered significant outperformance and superlative returns. And it looks like that probably history is going to repeat itself.
With the exception of media, Nilesh, there it's going pretty much boiling down to one Z. The rest of the pack is not quite moving, is it?
Yeah, I think, and that's the unfortunate part of it, that you'd probably have names like Z or maybe Sun TV or a couple of names in the print media side, which will continue to kind of do that. And I think, and that probably ensures or will probably contribute to valuations going overboard for those select one or two names because of lack of other names to deploy capital. So it's probably that just that one or two names which might just kind of do pretty well. But I think on the whole, if you look at technology, telecom, and media, I think as a combination, it's quite possible that as a basket, it would tend to outperform in this kind of an environment.
Let's talk about any potential positive triggers. If in the next day or two we get the Parliament nod for FDI in insurance and pension, do you think that will lift the rupee or the market, or it will get brushed aside like many other recent FDI announcements?
Well, it could provide a temporary kind of a fillip to essentially the rupee. I mean, you could clearly see some bounce back happening out there. We might see the levels of 61 quarter go back to maybe 59.5, 60, the kind of levels that we saw recently on the back of RBI's liquidity tightening measures. But it's not something which is going to be a significant game changer on a standalone basis. Maybe it will have to be a comprehensive set of initiatives, a comprehensive set of measures which will probably strengthen the rupee rather than just one sectoral FDI cap getting kind of relaxed, because that relaxation will come in with some kind of string attached, which is that a cap on the voting rights. So one has to really see how the serious insurance players, the foreign insurance players, see this as whether does this become a speed breaker, or they're fine with it for the time being and then wait for further relaxations down the line.
Do you see any game changer, Nilesh, between now and the next election result, which can turn the mood on India around or galvanize growth in any meaningful manner?
Well, at this stage, it's hard to kind of see that in terms of any change or significant improvement in the economic environment. It's quite possible that the earliest signs that would be evident would be maybe around the later part of this calendar year, maybe sometime in November, December, on the back of a strong monsoon and of course the festival season coming in. You might actually see domestic demand pick up based on that, and I think that could provide some kind of a base in terms of the economy itself. So I clearly believe that in the short term, clearly the impact of a favorable monsoon, I think, will have a positive impact on the growth rates. But whether that would be good enough to essentially lift the economy out of the current growth rates of around that 5% into 6 or 7%, I think at this stage is pretty hard to kind of say. The second big factor is that if there are any signs from the US Fed that the bond buying program will continue, I know of course it's hard to see that in the current environment and the current context, but if that were to happen, that it's kind of getting postponed significantly, I think that should essentially come in as a favorable positive. So I think these are the two kind of big game changers, so to say, because I think in this environment even small changes which can contribute in a small way to the economy could be clubbed as or classified as game changers. So maybe it's these two or three things we could possibly lift the mood, lift the sentiment, and maybe improve growth rates.
Thanks, Nilesh, for joining in. Good hearing your thoughts as always. Thank you for your time. That's a cautious view on the market.